Hi everyone. On January 2nd, I called out PDD as a top stock to buy. Since then, it's up about 33%. As you guys know, Chinese stocks have been on a pretty good tear recently, and I thought it might be worth revisiting this since this is a name that has recently seen a lot more attention and it's definitely a compelling company. So, what makes PDD so special is that it trades at just an insanely low valuation. If you're looking at the revenue in the past year, about 53 billion, net income 15 billion. If we're to take a look at the price to sales ratio, you'd be looking at about 3.6 and a price to earnings about 12.3. Comparing this to their 44% revenue growth and their 61% earnings growth, these multiples are insane, and essentially if you were looking for this on American stock, they'd be nearly impossible to find. Now, the earnings and revenue growth could easily slow for PDD, but despite that, it'd still be trading at a really cheap multiple. And the main thing to note is PDD has a ton of cash and cash equivalents. They have a lot of short-term investments. So if you take the enterprise value, you're coming to even lower multiples. But the huge question really is, they've got all this cash sitting here. They're not doing buybacks. They're not giving a dividend. They're not reinvesting it. They're really just doing nothing with it. So in most cases, I would like to use the enterprise value when I'm taking my multiples. But in the case of PDD, where their cash is essentially worthless, I probably wouldn't look at enterprise value. I mean, if you look at a bunch of Japanese stocks, you're going to see essentially the same thing. Huge cash hoard, they're doing absolutely nothing with it. A lot of Japanese companies will be trading below their book value because of this. And I think, PDD is no exception. The cash is almost worthless. So with that being said, whether you're taking it with enterprise value or with their market cap, you're looking at these multiples, still very insane, very compelling, even with the current price appreciation that's happened recently. Now, with PDD, I think the best case scenario would be that they do return capital to shareholders. I don't think it's very likely, and it appears that they've ruled it out in their recent earnings call. But yeah, I mean, just like with Apple, when Carl Icahn kind of went activist on it and kind of encouraged them to use their cash, if they did do buybacks or dividends, you'd likely see some multiple expansion. And with these undervalued companies, I think oftentimes, anybody with eyes can kind of look at this and say, well, it's decently undervalued. But what you got to ask yourself really is, why should it return to value? And in this case, I don't think there's a whole lot of amazing positive catalyst. I mean, if they grow quick, that's really the best they can do. But I think something that's really important in a stock is a retail following, really a cult-like following. And that's just because retail can provide more liquidity, exit liquidity. Market makers love to front run retail, which is why, they'll be paying for their order flow data, stuff like that. And a lot of stocks like Palantir, Hims, the reason they're so strong and they've been able to reach such valuations largely is because of cult-like following. And I think PDD is really finally getting that cult-like following. So some things that I want to mention though is, with PDD, you have the obvious China risk. And going into that, right, like if you remember Alibaba before, we see Jack Ma disappear, they're getting slapped with massive fines. PDD, if it gets too influential, it gets too large, tries to interfere with the government, I'm sure they may face a similar fate. But I don't think it's a huge risk given that, PDD is not extremely large now, especially compared to Alibaba. And I think Chinese companies have learned their lesson. The next thing that's really interesting is PDD has not had a CFO for quite some time now. And this is quite a large red flag, I would say. But, they've been able to operate, the stocks went up. So you can't rule it out specifically just because of that. Another thing that's extremely interesting is, you'll see stocks like Alibaba, and they're listed on the Nasdaq. They're listed on in the Hong Kong exchange. PDD is only as an ADR. It's not listed on Chinese exchanges, which is extremely weird, and it's a red flag to consider. Lastly, as you guys know, this de minimis loophole appears to be coming to an end. PDD took massive advantage of this. So, this obviously affects their business. It's not great for them. However, it won't massively affect PDD's business despite how much advantage they're really taking of it. And I think overall, you can't be super, super concerned with this. This investment, it really comes down to, do you think they can continue their rapid growth? And do you think the China risks are really too much? But otherwise, I wouldn't put too large size into something like this just because they do have all the China risks. But like I mentioned, with this valuation, you're not going to find that in an American company for the most part. So it's definitely worth a small punt. But yeah, for me, what I really dislike is just their cash pile just sitting there doing nothing. It really does remind me of the Japanese companies with a massive cash pile that's just not working. And honestly, cash that's not working, it's like it's not even there. So honestly, a decent investment. I still think it's a good pick for 2025, but it has its risks. So I don't think it's worth going with too big size on this. But yeah, that's all for today.